Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. How is everyone doing this morning? Good morning, Ken. Good morning, Davey. A big earnings week. Earnings starting today, big ones after the close. Good morning, Sashi. Good morning, everyone on other platforms like ShareVision. So, how is everyone doing? By the way, if you are new here and you find this content helpful, please consider subscribing, ringing that bell, and hitting the like button. And at least tuning in every day. Longer term viewers, hit the like button and leave some comments. All right, let's more people popping on. Jacob, good morning. George, yes, Geo Mission. Sometimes I just still call you Geo Mission. You should be Geo Mission George. Good morning, Sterling. Good. So Josh is voting for Taco Tuesday instead of Turnaround Tuesday. Josh is voting for the tacos. Genomic stock, good morning. I like that one, Josh. That's good. So, just trying to make it a little more lighthearted, but we'll go through the key levels with what to expect today. Just checking to make sure I wasn't a blurry. We had durable good orders, the headline number missing zero point 0.8 versus forecast of 1, but up from the last month's revised number. Durable goods X transport month over month 1.1 versus zero point 0.6, so that coming in stronger. The housing price index, all bunch of housing data, just why it's blinking right now, just came out, pretty much a beat across the board. House prices very, very hot, which if you follow it in your local markets, you probably know. Next is consumer confidence at 9, so that will be very interesting to see. They're forecasting slightly higher than the previous, but we'll see. In home sales, if it's declining with the price going up, that will be very interesting. I'm actually keeping an eye now on the Richmond Manufacturing Index and then the Dallas Fed Services Index, just to see how what's going on, if stuff is slowing down from that perspective. But isn't it so peaceful with no Fed speakers right now? It's very peaceful. Good morning, barely, I hope I said that, barely awake, looking for an entry point for Tesla. Oh, well, we could take a look at Tesla. By the way, FOMC, still it's baking in that 50 basis point hike. And remember, we're still in negative gamma, which amplifies the up and down moves. Also, just have this up here. UPS was gapping up this morning. I'm going to be watching for a potential gap play, but it is back gapping up above prior resistance. So that will be interesting. At least it was last time I peeked in. After the close today, Microsoft and I'm still going to call it Google, but Alphabet and also Visa is a pretty big one based off what the consumer's doing. So those are the ones I'm really focused on after the close. So do not ignore that. Just want to keep that up there. There's the earnings from this morning again. Pepsi was flat when I looked at it also. So here, we'll start off with the S&P. S&P, little pullback from that bar yesterday. What I'm watching for on the open is if we break above about 42.87, then that puts me back in short-term bull mode. If we continue to pull back, I will be watching. Here's little ways. I'm not going to keep these up, but essentially here's the area I'm watching for. We have, if we pull back below about 42.60, then I'm watching the 50 to 62.5 and the majors to 62.5. Anything still in here, I'll stay in very short-term bullish mode unless we have momentum bars, and a close on a short-term basis below about 42.35 puts me in bearish mode, and then I will start targeting retesting yesterday's low areas. But as long as, remember, there's some key support levels in here. You can see this. I'm moving this up to especially the 37 harmonic, about 42.62. That's a little support level on an area. What will really change me even short-term bullish is if we break with momentum bars lower. But we could just be doing this little pullback before the open. And this, again, is only for a short-term potential bullish move up. We are in the 4-hour rotation zone and rotating down. So do keep that in mind also, but I need to see, I mean, this is tactical trading right now. I need to see the price action off the open when that really kicks in. And cycles on the 4 hour just rolling over, so we might see a little continued pullback and then the rotation back up. We're not close to the daily rotation zone, but this would be really, this is actually a pretty short-term bullish bar. So if this gets wiped out, especially below that 62.5 level, then that is a very bad sign for bulls in the market. Hello, options 22. No, Sashi, negative gamma amplifies both up and down move. You're thinking negative means down. Negative gamma means for hedging for the big massive options positions for market makers and houses that have on these massive, they put on massive put positions to hedge downside risk. Negative gamma means they have to hedge and the down moves get amplified, so they have to be sellers into those down moves and they have to be buyers into the up moves. So that what that does is exasperate the moves. Versus when you have positive gamma, that's a deadening effect on the move. What it means is when the market rallies, the hedgers are selling into the rally or buying into the dip. Okay? So keep that in mind. That's why I point this out. It doesn't mean you have downside risk. This means you have volatility risk. See, if it says right here, higher volatility, and it amplifies the moves naturally because they have to do the opposite. They have to go with the move for the hedging. This means you have, see, positive gamma, lower volatility means you have to go against the move for hedging. So that's what this means. So this is a deadening effect. This is an amplifying effect. And you can see it's about halfway into negative gamma territory. So don't think that means it just has to go lower. Like yesterday, it amplified the up move. Last week, we were still negative gamma territory. It amplified the down move. So what it does is create these big volatility events. And that's why you have to be really nimble when it's in negative volatility. Okay? Let me get through a couple other things, then we'll look at your NASDAQ, again, 4-hour rotation zone, rotating back down, doing the same thing pretty much with the NASDAQ. We'll be looking for short-term bounce plays unless it gets below about 1331 area, and then I will be targeting yesterday's low. Okay, you can see right here, is this a potential double bottom? I'm just glancing at this. There was not one in the S&P for earlier, and see, this is not because the second and third target move above there. Now, above this little here, you see where this 75% harmonic is to about 13,525 to about 13,530. We get above there, that really amplifies me in short-term bull mode. Right now I'm in neutral mode. We start pulling back. Going to keep an eye at 13,435. We break below there. It's pretty much hands off the wheel until we get to about 13,385 to 13,332, and then that close below 13,334 is bearish mode. Dow. Again, that's why these markets are tricky, because with everything going on, they can turn at a dime. When you are in long-term bearish mode, they make the markets tricky. You don't just naturally have that strong upwards bias. The Dow, let's just peek to see if that does not have a double. My area for the Dow I'll be keying off of this morning is about 33. I'll just go to 33,900. It's right there. 33,900 at the pullback levels. Again, why I go through this is because you can apply this to whatever you're doing. I'm trying to show how, if whatever you're trading. Now we're breaking down below this. You see this little support wedge right here. We're trading right now, right there, and that's the 37.5% harmonic. We break down below that. It's pretty much hands off the wheel until that 50% harmonic. Why the 50% harmonic is also at this prior resistance yesterday, and where are we sitting? Yeah, yesterday and again at noon time. So that's key. You have a 50% harmonic and you have this resistance shelf becoming support. So I will watch for a turnaround move potentially at 33,635 and then again at 33,535. We get below that, back to full-blown bearish mode. Then we'll take a look. Russell. Just a bigger picture on Russell. Again, pulling back, you can do your harmonics also in this. On a rally, I'm watching about above 1952 for a rally to about 1972. And then if we break down, I'm not going to put the harmonics on that. You can do it, but again, 50 to 62.5. And then we drop below that 62.5. We'll watch for a retest of the lows. And if we start getting down here in the low area on the Russell, I'm going to start really watching for that break to new lows. DAX. Stalling out, only bullish mode for the remainder of the European session is about 14,176 area. That's all I'm watching, but then that has limited upside. Key support for me is coming in now right around 14,025. Let's see where we have. Then I'll get to some other stuff. On the weekly chart, does the SPY have head and shoulders forming? SPY on the weekly. No, head and shoulders is a reversal pattern. It would you'd have an inverse one, but this is not a head and shoulders, even if this turns up. It's not reversing enough of a move. This shoulder is too close to the head anyways, so there is not a reversal pattern on the SPI for the bullish case, and there's nothing. You can't use this as, you can't say shoulder, head, if this rallies up and say shoulder, because that would be a topping pattern and you're not reversing any move. You can't be reversing this move because you have this high area up in here. So you don't have an inverse or a natural head and shoulders. Remember, both inverse and head and shoulders have to reverse moves, else they're not valid. And people will say incorrectly, even if this rotates back up and then heads lower, they'll call this a head and shoulders top. It is not. It would have to be at a top. This was the top. So now, do you have this being a head and shoulders? No. So if you're looking at this whole pattern with shoulder, head, shoulder, now you have a double hump shoulder. So you can't use that one there either. Okay, because now double hump shoulders do not work very well. If you do break below this key support area that we're making here, though, you're into a longer term down move. You just can't use head and shoulder patterns. All right, let's take a look at crude. Crude inside bar, there's still nothing going on. For me, this is just in consolidation, a little short-term up move, but it would only be short-term trading. We have this little clear path move. So on a continued rally, I target about 101.75, and the breakdown area for me is about 97.60, but nothing from a larger term pattern just yet into this huge consolidation play. Gold getting that bounce up, didn't quite get down to my level. I'm still watching the same levels I talked about yesterday. Since I couldn't do anything down here, there's no sell up here. The next sell up here for already a core position is around 1939. Silver getting close to that area. I'm still watching the same levels as yesterday. And then the sell target is, I'm just going to bump it down a hair to about 24.54 area. Notes, interesting. I just wanted to touch on something in notes. There was some good trading earlier. We had this little resistance shelf move up here into this clear path. This is a key area to move up a stop. Why? Because you're into this breakdown zone from the clear path and you have the harmonic there. And now it's just trailing a stop. And now we just had, this is also a great area. Just a little teaching here. Since you don't have a good pausing bar yet, you use the reverse harmonics. So next area to take action would be about 120.10, and pullback area would be about 120.03. Now in the bigger picture, we're chewing through. We closed yesterday at the rotation zone. We're right trading now just at this 62.5. So if we close above this 120.05 area, I'm watching for the continued rally higher, even if we have short-term pullbacks. And why am I still watching for a long-term or a short-term bottom formation? Because we're so far off the weekly chart, we could easily get back to about 121.18 area. So if you're following that, please keep that in mind. Dollar index still moving higher. Next target 102.37, and now key support is back in this 101.08 harmonic with the rising daily rotation zone. VIX. Slight pause here. Still, the key support is back at 24.94. Should it turn into rally, but this isn't enough of a move to make me concerned to the downside yet. If you get now on the pop above 30, I start getting more concerned to the downside, and that will probably be in correlation with breaking down below that 62.5 levels I talked about earlier. Tesla, I know we had entries on this. Same breakdown area is 975. That's what's key. That's what I'm watching right now. Pre-market, we're trading 996, so pretty much flat from yesterday. If you want a little breakout play, you're looking above 1006. That was pretty key resistance for a bunch of the day yesterday, you see here. If you want to be a little more conservative, you go to about 109. Now, keep in mind, you have a lot of stopping points in here. So, again, can't give exact trading advice or plays, but if I was doing a breakout play above here, the stop would have to go below 175, and I'd start raising it with these harmonic levels. Let me just adjust them slightly with this low. But you can see here's the harmonic levels. So first target would be about 1019. Next target would be right around 1034. If you want to get a little more aggressive, you can use about 1029. But I definitely look at this 1034. You have this little support shelf with these tests, the two spike highs. That coming in 1033.80, I'd probably go to about 1033.50 on there. Above there, I'd use a 62.5. A close above 62.5 puts it in more aggressive short-term bullish. All that's in place unless you break down below 974. You break below 974, see all these bottoms here, there's going to be a lot of stops below there. So you break down there, especially with some momentum. You're also into a clear path move, and I'm targeting 930 then, and then 879, 880. But everything, you see the moving averages are all flat. This is just pure consolidation. So there's nothing long-term on this. It's only short-term trades in Tesla. Let's see. Sterling. Sorry, I jump around the comments to try to help people. RDBX up 15% after triggering a sloppy double bottom on daily yesterday. Looks better on the weekly. Reddit is on it. Let's take a look. Well, if Reddit's on it, that's actually just, yeah. Ugh. Yeah, weekly is better. You have this extended bottom, though. You're up against this little zone. We can map out the targets. I'm not crazy about that on a daily. First target 462. Next target 512. Next 562. Let's see where that plays in. Sitting right here at the weekly rotation zone, so if it can really get a move on above that, those are fine targets to still use. You're into nearly an advanced clear path move. And the next area I'd watch would be 657 if they can keep this thing moving. Key support on any pullback, since this is one of those Reddit plays, would not want to see it drop below 323 with the rising daily rotation zone. And you have the 4-hour rotation zone there. So this is becoming support right now. Would not want to see it drop below there. Also, it would suck people in, and you'd bring them back down. So that's the short-term play on that one. The QQQ 1-hour double bottom from yesterday close is still in play. Yep, that's fine. Even on this pullback to here. Now this gets a little tricky. Let's take a look at that 15-minute. Because I start to watch to see where we are. So it has not hit the first target. The pullback areas are right in here. So we're trading 327.34. I don't mind pullbacks between 328 and the candle bodies that formed the topping pattern 326.32. So those are still playable. Where would this pattern invalidate? Well, you get a close below that 62.5 at 325.30. I wouldn't want to be in it. Why? Because that favors a retest of the lows. Wouldn't want to be in any short-term Q plays higher if you get that close below this 325.25 level. Other than that, it's right now just that pullback based off the futures pulling back. Good morning, Lauren. Good morning. Hello, Eric. Taco Tuesday. Exactly. So I think that's it. What else should we check on? I don't really have anything short. Oh, UPS earnings. Let's see. They were up here pre-market. Now they are pulling back. So UPS, what I was watching for was to see up here. They were really up higher. I was watching to see they were up around 192 area. Now they're trading 189. So back below this, 189.65, they closed. They're actually down from the close. So there is no gap fill play now on that based off this pre-market action. So there's nothing left there. Just check on PepsiCo, which did beat. You can see here, double beat. I do not know if they guided lower, but pre-market, they are down. If we do rally in anything, I will start looking for a potential small little gap play in Pepsi, but that's about it. And if we break below 171, then nothing going on there. With that, we're closing in on the open, so I'm going to get ready. Thank you, Ramsafal. Thank you, Eric. Thank you for everybody watching on other platforms. I really appreciate everyone turning in. TTWO. Take Two Software. That little double to hit in the first target. Oh, that's ugly. William, really? I'm short-term bullish unless I got that we close below those key 62.5 term levels. I'll watch for a bounce, but I'm not being aggressive to the bullish side. If we close below the 62.5 levels I went over earlier, then I'm shifting to major bearish again. Take Two, there's that's ugly. Only a slight bullish play above 133.50, but if you break below 131.50, watch out below. We'll leave it at that. I'll talk to everyone later.